Hello everyone. Today I'd like to talk about Tesla and see if we could have spotted this run using the EPS Momentum tool. So before we go into analyzing Tesla, I just want to remind you of how the EPS Momentum works. So first, you need to look at the EM score on every earning day. So when the EM score is greater than 20, you have found yourself a good stock because both the earnings and the sales are in extremely high momentum, extremely high growth, and that's something very valuable. The second thing is you need to have a look at the timing. Those three charts here: blue, market score; yellow, timing bias; and green should all be above 0. And on that day, we see that here, exactly here, at on the 10th of September 2019, the stock was at 235. That was a buy. So if I zoom in nicely there, it was a buy, and you can see it because the journal buys it at 235.5. So the journal is the EPSM bot that is doing paper investing, buying and selling, and putting a stop price at a trailing stop right behind it. Okay, so the trailing stop has been hit, but if you choose not to have a trailing and have a regular stop at, let's say, 7%, it would not have been hit, and you would have had a nice rally. What else can we get from this? We can look at funds. So, for example, funds have been buying the stock over the last quarter. We can see that there's 1.36% more shares bought, 2.4 million additional share bought. So the institutional score is high. So this is very good. And also a very good signal is the revision. So over the last 90 days, even more than that, you can see the revision went from minus 11 to almost 0, close to 0. And so it will continue to go up if they revise higher. So this is very good. As you can see, since the 29th of January, which was that date, revision have been extremely high. So going from minus 567 to this level here. So it's a very good signal that Wall Street is actually pushing or agreeing with everyone. Analysts are revising their estimates. The next thing to watch here is also Tesla P ratio. So Tesla P ratio is 3,917, which doesn't mean anything. The forward PE year 1 is 390. Again, a little crazy, and the year 2 is 83. So it's extremely high, or even not realistic. So at EPS Momentum, what we are using is the cashback P. So that's a calculation that we've created, which actually takes into account the EPS dollar amount that you would get on year 1, 2, 3, 4, 5, all the way to 30 years if you actually own the stock. So if you look at the price of a stock, let me just close these widgets here so we can look at the stock price now. Price of the stock is $900, right? So you would buy the stock at $900, and the question is pretty much how many years will it take you to actually get your $900 back if you were to only take all the EPS dollar amount every year. So first you get $11 back, then $15, then $121, and so on, all the way to 20 years. So it will take you 20 years to get your $900 back, which is pretty cheap if you ask me. This is all based on Wall Street long-term growth view of the high-end 45%, 40%, or 35%. And also this column is based on target prices. So target price of 928, 514, and 222. So again, very interesting to see this. To the question, is Tesla overvalued or not? Well, if you have a P of 20, you don't look really overvalued to me. And that's it. So how do I find most stocks ready to break out? Well, it's very simple. We've set up some list on the top. You just click on Open Trades, and this will bring you to the screener where you will see all the new initiated trades by the PSM bot, and you can filter by market cap if you want. You can add any filter you want. And here you can see, for example, Alibaba Group is one of them, where the trade was initiated on the 14th of February and is still going on. So that's it. Thank you very much.